Welcome to Guardian Capital's Market Outlook discussion for the month of January 2026. The agenda will be discussing four things. First, education, the thinking framework. Second, earnings. How has the earnings for the BSE 500 companies been for the current quarter? And three, valuation and expectations. In this, we'll be discussing how the market is currently being valued and what's the outlook going forward. And fourth, the sectorial view. Principle 1. Earnings growth determines 80% of returns. If you closely look at the table, we would like you to focus on the red circles where for the past 3 decades, BSE Sensex price has grown at a CAGR of 11%, whereas the earnings have grown at a CAGR of 10%. So therefore, we can strongly conclude that there's a high correlation between price growth and earnings growth. Principle 2. Revaluation growth determines 20% of returns. If you look at the example below, Asian Paints over a period of 11 years have delivered a CAGR return of around 13%, of which 80% have come from earnings growth and around 20%, which is 3%, have come from the revaluation growth. What's revaluation growth? In 2014, people were willing to pay 43 times for every 1 rupee earned by the company, whereas in 2025, the same people were willing to pay 61 times for every 1 rupee earned by the company. This is the revaluation growth. In this slide, we would like to highlight the importance of extra return generated. Let's just say you invested 1 crore lump sum at a rate of 11% for 30 years, you would end up with a corpus of 23 crore. However, if you earn 1% extra return, your corpus amount would increase by around 7 crore to 30 crore. And if you generate an additional alpha of 3%, which is around 14%, you would end up with a corpus of 51 crores, which is 122% more than what you would have earned if you invested at the rate of 11%. So this signifies the importance of staying invested for longer periods of time. Now moving on to the second aspect of agenda, the earnings slide. If you look at the table, across all market caps, the revenue growth for the latest quarter has slowed down and is growing slower than its historical average growth rate. However, on margin front, the margins are quite strong, primarily attributable to the deleveraging of balance sheets and also lower interest cost, helping the companies increase their profitability. Third, valuations and expectations. And on valuations front, currently, barring small cap, all the other indices are looking overvalued, particularly the mid cap space, which is overvalued by about 25%, followed by BSE 500 and large cap, overvalued by about 20 and 19%, and banking and finance, overvalued by about 16%. Our view on fundamentals. Historically, we've seen that companies have grown by about 11%. However, the growth over the past 8 quarters is slowing down, and for the latest quarter, the revenue growth was just only about 7%. And our overall view going forward, with markets on expensive side coupled with revenue growth slowing down, currently it would be ideal in this scenario to wait and watch. And the last aspect of the agenda, sectorial view. And on sectors front, currently majority of the economy, which is about 60% of economy, is looking overvalued, and only about 36% of economy is looking fairly valued. And on current revenue growth run rate, 80% of economy is still lagging its growth rate, and only about 20% of the economy is growing faster than its historical growth rate. And on opportunity front, currently we see opportunity in only about 3% of economy in 2 sectors, which are FMCG and consumer durables. Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.